Are we ready? Audio check. I think I'm good. We are at, where are we? HQ2. I don't know what's going on with my other internet at the other office, but whatever. Moving this mic around. Santa is late. I don't know. Is Santa late? I mean, it wasn't horrible. I guess certain things could be a lot worse. That's for sure. I probably need to put some things on. Let's see. I haven't really. All good. All good. Third like. Appreciate it, guys. Hopping in. Look at you guys. Already in. But, hey, look. This is, you remember like a week and a half ago? I think it was a week and a half ago. Everybody was freaking out. Doom is coming and it was all bad. And here we are, legitimately, just take a breath, right? At the highs. Maybe Santa came a little bit early. I don't have the Santa rally statistics ready today. Not that it really matters, but the Santa rally itself, if you guys know me, like, honestly, I'm not a big Santa rally guy. Just because the Santa rally is pretty small, like, statistically speaking. It's like, did it even happen? It's like a couple points. You, you think Papa is back, so you also spy all-time high by end of month. Easy peasy. 685. That's what I'll say. 685. If we're trending over 685 on SPY, that's happening. It is not a question in my mind. That is absolutely 100% happening. Are we there yet? We are not there yet. And are there cracks under the covers? There's some really weird cracks, but I don't think it's that bad. And we've come quite a ways. And this week, maybe the next couple weeks, I think that we can be on slightly shaky ground, which, by the way, isn't going to be a bad thing. If we can stabilize here, I think this is going to be perfectly fine. But to do that, I think it's important to be aware of what we should be watching for. And that's what this stream is about. And if you're new to the channel, welcome. Make sure you subscribe. Every Monday we go live. Give the video a like. Appreciate that, guys. And whatever support you can give, always appreciated. So, what we do here is kind of go over the headlines for the weekend, and moving forward, what do we need to look for, right? And how does this affect our portfolios? How does this possibly affect our trades for the rest of the year, or maybe for the week? And one thing's to be noted right now is that, in all reality, it was looking very dire, a couple weeks ago, and to think that that's all gone away is probably a pipe dream, quite frankly. And what would be healthy here is some little chop, and to create a new kind of investor base, if you will. Some things still looks good, some things don't look so good. And underneath it all, the vibe, if you will, but the theme has been, look, there's some weakness at the very tippy top of the market, a little froth. And underneath it all, while some of those stocks might be coming in and maybe even going sideways at this point, having had come in quite a bit, underneath everything, we're seeing some broadening out across the market, which is breadth increasing. And that in itself is actually a healthy thing. So is Santa bringing school of gains? That's what SOG is. Santa is bringing school of gains. If it's the last thing I do, swear to God, Santa should be bringing school of gains. It's not going to be in its entirety, but we're going to do a little charity piece, if you will, for this. And for sure, if you guys are trying to do this on your own or interested in this next release that we're going to do in the next, I'm hoping, few weeks, is going to help everybody. And everybody, and I mean everybody, is going to get to see this. So it'll be released in phases, stages, kind of like a Netflix series, like one season at a time, not one show, but like a full season at a time. But today, here we go. This is what it's about: finding some value, finding where do we kind of maybe want to stay away from, what's a little hot, what's not, and what's good, right? So let's go ahead and get into it. This is my I'm gonna change. I hate how it has my thing. I'm just gonna see what happens if I take my name off. Boom. All right. Well, you guys know who I am. I don't think I need to have a name up there. So this was the thumbnail of today. Did anybody actually the fresh cut, bro? No, I didn't get a haircut, so I need to go get a haircut like right after this. But did anybody get the notice on the China bonds crashing this morning? Like China yuan bonds legit crashed, and you guys legit crash, halted down like 36%. It's like real estate bond stuff. So it's real estate stuff. It's a big deal. And there's some little cracks underneath the recovery. So our buyers stay away from and I think we're gonna get into this. But here, so it's the, I don't even know how to pronounce this, but the Vanke yuan bond halts after 36. So check this out, both of these two. So only Japan issues. So two things. Remember 2 or 3 weeks ago, we talked about this yen carry unwind 2.0. This is still there. What we got so far was a band-aid. It's not over. Don't think it's over. It's not over. It's a band-aid. This has this, you guys, this has this is still a thing. But what I'm doing today is I'm going to give you guys dates and like very specific things to look at, to watch for, which is probably different than most people, I think. This China yuan bond halting after a 36% drop. This has to do with their real estate market, which, you know, on the onset, like on the surface, you might not think it's a big deal, but if it really gets bad in terms of what to watch for China, if there are more bond halts or like a Chinese bank bailout, that actually could put pressure on the U.S. in terms of our imports and the trade wars. So that would be bad for their economy. I think their real estate is down like 2.5% in very short order, which, if you're not familiar, you know, everybody wants to say, oh, Baba's undervalued or Chinese equities are undervalued. And yeah, it's been a mess for a while. But in the Chinese economy, real estate is like the equivalent of our equity. So our equity markets, they don't look at like stocks the same way that we look at stocks. And this has always been like a cultural disconnect. It's real estate, and it has been a mess for a while. But if the real estate market over there takes a hit, that's like our stock market taking a hit. And it's a bigger deal than we might really think. And it could potentially impact us, especially if they step in. But these are just things to watch for. Nothing's happened, and we'll talk about this in a little bit. And the market's still on edge. So to expect some choppy rides from here, I think is what you should expect, quite frankly, and not to just be like a V-shaped recovery up and to the right. I think it's more like one of those K-shaped recoveries, if you will. Fun got in on the dip. Oh, look at this. But so, you know, Bank of Japan signals a rate hike, which strengthens the yen. And if this goes too far, it could actually spark a yen carry unwind 2.0, a whole nother iteration of this, which I think if I tried to do the math, I think was like a potential another 5%, which, by the way, is exactly where we just came from. So at the end of the day, it's not really that big of a deal. what it could be is another dip buy for the US market. And I think that's realistically what you could be looking for. And we'll kind of lay this out in a little bit. So it's not like a sell anything. No, I don't think so. But is it a potential second dip buy coming? It's possible. And it's going to be dependent on what we do here in the US. Celsius was a cool call, good call. So far, it's been a good call. We'll have to see. But this yen carry trade unwind 2.0, I think, is very obviously hitting the crypto markets. And it's also affecting gold and silver and things like that. So long gold, long precious metals has been working out. I think that is a proxy for geopolitical uncertainty. And this is one of those things like, hey, what's the global economy looking like in terms of currency, all of the above. I think the gold story stays strong. That continues to go. Maybe a little sloppy, maybe a little choppy, but at the end of the day, 2026 is still going to be another gold year in my mind. Right now, is it basing and is it like not rallying? It's not. But on dips, is it Bible? I think so. What this is going to happen, what this is going to come to in near term is Jay Powell. And we have another FOMC rate decision coming up very, very soon. And we have, I believe, Jay Powell talking tonight. So if you weren't familiar with it, if you didn't know, I believe it's like late night tonight. Jay Powell has some kind of speech. I'm not sure what he's talking about. We can take a look at it. But there's Fed quantitative tightening ending, and that's boosting liquidity. And so what we're going to look for 6 p.m. Pacific, so that's like 9 p.m. Eastern. We're going to look for him to kind of signal support, right? And the higher probability we have of this our rate cuts coming down, the better, right? But if he doesn't say anything, silence can worsen the dip. The markets are not going to like that. So moving forward, everything's going to be kind of teetering on Jay Powell for us in the US and the commentary around that and who the next Fed chair coming in will be and what their stance is going to be like. Because if this Bank of Japan rates continue to rise, well, everybody that's been borrowing yen at super cheap rates, not really, it's not really happening anymore. So that is the unwind 2.0. But in the meantime, what we got is Black Friday resilience, which is still boosting a lot of stocks. So things like Amazon holding up pretty well. Things like a lot of the retailers. I don't know if you guys saw this. The mall trade is just absolutely insane. I haven't looked today, but yesterday. Let me see. ANF was my trade. This thing Abercrombie has gone from $65 to 105. I think it's probably a little hot right now. Probably time to trim that. But a lot of these things have just been an absolute tear. And Nike, I'm looking at Nike, 65 at the lows. I think a lot of these are probably slightly de-risked, as long as the trade war stuff doesn't come back into play. Which, if the yuan bond stuff ends up showing its head, which is not the yen. If the Chinese stuff ends up being an issue, well, then that could affect some of our trade war talks. What's up, guys? He's not allowed to talk about rates on. Yeah, too funny. I mean, yeah. So the Fed, I believe, is in a blackout period, actually. So coming into FOMC, everybody's just going to be looking for any kind of little inkling that they can grab onto. And so what does that really lead us to? I think you can rest on two things. One, we're still in this January effect for the mid-cap growth stocks. And if we hit this November rally, well, typically seasonally, we have us pull back into mid-December. And so if we do have another dip, that would probably set this one up for that buy, and that would initiate actually like the big rally for the mid caps. I'd say mid caps, like not necessarily small caps, but like mid cap growth. I don't know what that what that ETF is, but it's like Russell 1000 growth is where I would be. And then there is one other. I used to have this seasonality. Let me pull this one up. I like this slide. So we are actually at this point, we're actually closer to here. So from a year-end perspective, I think that we actually could have this little bit of a rebound, but this is the second year, year two in a presidential. This is a presidential 4-year presidential cycle. By the way, we tend to have a little dip in late Q4, late Q3, early Q4 of that second year. And this could, like that whole pullback here, if it's 2026, that could be this is like the big dip buy. If you're super patient, that would be the big dip buy. But we're still in a bit of a bounce mode. And I think that if we have one more dip, that's going to be fine. November, historically choppy. December, actually choppy as well. But that leads us really into what do we have for right now in the immediate future. And today, not really much, just a little bit of Jay Powell speak. Tomorrow we have Redbook, which Redbook I think is retail sales. And then we start to get some of our economic data that we haven't had in a while. And so we're now getting these ADP weekly numbers, which is like jobless claims and things like that. But we're actually getting our jobless claims again on Thursday. Everything this week is going to lead up to Friday PCE. So Friday PCE is definitely going to be the biggest thing to watch this week. So as we ramp up, we could have an up day today. We could have even a slightly green day tomorrow. And then as we get through the week, we can get a little climb the wall of worry, if you will, as we head into PCE. So that's how I'm looking at this right now. Before we move forward, this is where we are on earnings. So we do have one more piece of earnings to get through today or this week. We actually have CRM, and I know a lot of people. I think some of the crew is watching CRM. CRM moves a lot on earnings, and this is typically, I believe, their best earnings of the year usually. So we'll have to see how it goes. But so far we've had a pretty good quarterly like earnings report. So to think that fundamentally, it's all bad, it's not all bad. This is historically where we're coming from up here, but it's not as good as we have been so far. We still have a few more to go, but again, this is not that bad. So earnings are still holding up. The only ones to lose really Boeing, Home Depot, McDonald's, or to not beat expectation. Look, overall, this is pretty stable. And again, this is the calendar today. I did not see. Oh, so MongoDB is a big one to watch. Mongo is going to be a big one to watch today. Is today the first day of December? Ooh, I'll check that. So software is a tough one. So this one usually makes big moves. I mean, massive moves on the earnings. And I think it's been up the last few quarters. CrowdStrike, great company. Here's what I'll say. CrowdStrike usually sells off on the actual earnings event. Look at Palo Alto Networks, look at Zscaler. Don't be surprised if this thing takes a huge nosedive. It's usually a dip buy after they report, not before. So just so you know, oh my God, I don't know if these are late. I'm just looking at some of these comments. It's usually a dip buy after, not before. You don't want to go long into these things usually. And I think Zscaler, Palo Alto Networks, these are direct competitors, or not direct competitors, but these are in the they're not direct competitors. I'm sorry, they're complementary technologies, but maybe take a cue from that. They'll usually base out, and then you'll see the real move. But you don't want to chase this into it. Not that it's up right now. It's not. I don't believe it's up into that report. Marvell, what's interesting in the semi land is that even though I think Nvidia's up a bit today, this probably has to do with Jensen coming on. Yeah, it was down when we first opened, but I think that had a lot to do with Jensen coming on with Synopsys, which, by the way, is like a pretty solid bounce on Synopsys, and that stock has been beaten up quite a bit. Possibly one to watch. Synopsys, yeah, I don't hate that at all. SNPS is the ticker there. Finally got a little love. Thanks, Jensen. That stock was hurting. Nobody watches this thing. Yeah. Okta, she trades in a typical range. Everybody knows what that range is. Pure Storage, probably good. Pure Storage has not been running quite a bit, but really good company. Shout out to any of my Puritan fam out there, if you're out there. But also at the highs. We'll see. Snowflake. We got some high flyers this week, guys. I didn't really realize. So we got MongoDB, CrowdStrike, Pure Storage, and Marvell usually go under the radar. CRM, big mover. Snowflake, big mover. And Rubik is going to be probably a big mover. HPE is this is the enterprise version of HP, enterprise ARM. So not laptops and desktops. This is actually servers, storage, and networking. That one is Dell. This is Dell equivalent. This is probably good. HPE is probably good. Actually, I would assume. I'm pretty sure HPE is going to be good. Just nobody really knows it. And yeah, this is pretty far towards the lows. They're not as good as Dell. Probably better financials than Supermicro, but they're probably good for a trade. And Rubrik, I love Rubrik as a technology, but this valuation thing is just like killing me. So we'll have to see if some of these things like your crowd, Rubrik, take a hit on earnings. I would wait for these to kind of settle out, and then I'll probably start nibbling. DraftKings, yeah, I mean, I like DraftKings. I know some people don't like DraftKings, but that's me, and I like DraftKings into this season. But this is what we're gonna do. I don't know if Evan's gonna join us today or not. I sent him a note, but every week I do like to go and check out some feeds. Here's his pinned post, and every week Evan, our buddy, Stock Market News, has been putting out a little catalyst watch for us. So let's go ahead and take a look at what he's got. All right, pretty nice thumbnail or picture. Shout out Evan. AWS reInvent. This is starting today. Nice. Amazon still doing well. Actually, Amazon exactly where I thought she was going to land. So we'll take a look at that today. reInvent plus Black Friday, Cyber Monday. Probably okay. I like this one a lot. Cypher, these guys just high volatility. You're not going to look at IPO watch. Billion to one. I've never heard of this. What is billion to one? IPO IPO lockup period expires on Circle. All right, so that's a watch. IPO. So we're gonna watch Circle this week. IPO lockup period today. We're gonna put the make sure somebody drops Circle. I'll drop Circle in the chat. They said I could go to the thrift store. Oh my god. Yeah. All right, these lockup periods ending, it sometimes releases a handful of supply in the market, so we'll have to take a look at that. Key reports for a lot of the Chinese EVs. Okay. And this is what Tuesday, and then Amazon. I don't know when the keynote is for AWS. Let's see, AWS keynote. Tuesday, 8 a.m. So this is the key. This is the keynote. Tuesday, 8 a.m. There you go. So this, I don't know this guy, Matt Garman. That is going to be the specific time that Amazon's going to make probably its final push. And then after that, it's like, what have you done for me lately? Unfortunately, it's how the market works. And then Marvell, we just went over earnings. Monster Beverage investor meeting. Vail annual CRM. Cyber Monday recap. Does anybody know where to get like Adobe and CRM numbers? I know Adobe has like retail numbers that they release in CRM. Does CRM release Cyber Monday recaps? I don't know where to get that data. NVIDIA participating in a conference. All right. Retail Federation, Thanksgiving weekend shopping results. All right. So Tuesday, a lot of these results for the retail companies are going to start coming out. Earnings we just went through all day. Anthropic CEO, Dealbook Summit. That's definitely another one. Coinbase CEO. Dude, GM stock is shocking. BlackRock. So Dealbook Summit's cool. I don't know if it's, oh, look at this. Alex Karp joining in. Interesting. Interesting. And then Investor Day, Genius Sports, Massey, Global Foundries. I don't know if that's going to be a big deal. Probably not market moving. Thursday earnings, Rio Tinto, Investor Day for IMAX. Do you guys remember looking at IMAX when is AMC moving today still? Anybody see any movies in the theaters? People used to go to the theaters on like Thanksgiving, right? Do they still do that? I have no idea. I was never a Thanksgiving movie watcher. Man, this stock is just horrible. Ew. I don't even want to look at that thing. Just ew. And then Friday. Oh, there you go. Victoria's Secret. Zootopia was good. AMC was full. I mean, if AMC was full, went to watch Demon Slayer. Well, that's a few weeks ago. I mean, so those are good movies. Silver. Oh, for later, yeah. Silver. I like Silver. Demon. Is this a good movie? Demon Slayer and Zootopia too. All right, we'll put those on the list. You guys have movies. Sorry. So this is the answer. People still go to the movies. Do you guys have any good movie recommendations? I'm all ears though. All ears. I did like The Last Samurai on Netflix. I don't know if you guys watched that. No, it does not mean long AMC and GameStop. It does not. Oh, ServiceNow. Oh, ServiceNow is a 5-to-1 stock split. Hmm. Well, that's a vote for a 5-to-1. Okay, and then for the data, so this PCE we're gonna get on Friday is for September. So it's delayed data. And by the way, I there's part of me that is thinking that, because the fundamental data has been so delayed and it's coming in so slow, uh, there are still a lot of, we call them market participants out there, that just can't really move very well, or um, with a lot of conviction, rather, without good fundamental data. And until we really get caught up, I don't, that in addition to the holidays, I don't know that they're really going to be able to like step in full force. So this, if we do get a dip mid-December, that actually could set up for the best buy, no pun intended, of the year. So we'll see, but it's not over till it's over. We just went through. Oh, Evan's got a couple more earnings. Evan's got, what does he got here? Ulta. He's got Ulta up here. PVH. I don't usually look at health equity. I know you guys look at UiPath. I don't. Um, Thor, GitLab, small caps, Box, AEO. Okay, I'll say this one. If Abercrombie and Fitch is going to explode, Urban Outfitters is going to explode, all the above is going to explode, AEO, assuming it hasn't already, I guess I should look at the chart. Damn it. It kind of has. AEO should do the same. This is going to be muted because it's already up quite a bit. So there's a lot priced into it. The thing is up 21% in 10 days. But this is the last one. American Eagle. And I guess there's Victoria's Secrets, but I don't know. I don't know who's long Victoria's Secret. VSCO. Oh my goodness. Victoria's Secret has had the biggest move of them all. 30% in 10 days. All right, guys. What's Kramer say? There's always a bull market somewhere. I mean, this mall trade is something else right now. Rivian above 17, yeah. I'm long the commercials for Victoria's Secret. Oh God. I haven't seen a commercial for Victoria's Secret in a very long time. So they're probably saving money on that front. But I think, if you're going to go hunting out there, these kind of names, stuff that you don't usually Deckers. Oh, stuff that might be de-risked. Look, I don't. Deckers. Okay, this is under the radar. Deckers is PhotoDB. Deckers does what? Deckers, I think, is Uggs, I believe. Don't quote me. Yep. Oh, I got it. Uggs, Hoka. So under the radar. There you go. Deckers. Look, crowdsourcing trade ideas. Crowdsourcing trade ideas. Deckers. What's this from the lows? From this low? I mean, that's all the way down. I don't know. Anybody put Hokas on the shopping list? It's a great question, June. I don't know. It's a great question. You'll have to ask. But we buy these Uggs. I mean, I don't have any. Wifey's got a gang of these. I don't own any Hokas. Tevas. They only have 3. I mean, this was just so hot for a while. How's my VF Corp doing? Oh, baby. VF Corp 18. We're looking spicy. VF Corp is looking spicy. You want to see one that looks like bottomy? Just saying. Deep value. Deep value. The mall trade. North Face, Timberland, Ultra, Kipling, Jansport. I think they sold Jansport. VF Corp is spicy right there. Holy shimoly. Wasn't Burry in on my VF Corp trade? Actually, in monthlies on. Ooh. All right. So I think this is broadening. The mall trade is hot. The mall trade is hot. Some of them are a little too hot, I will say. My ANF might be a little too hot to press the bet. Is it done? Probably not. I mean, if this thing, talk about a bearish to bullish, like turn it around. This is a monthly chart. Could you imagine? Can you imagine, like, if this monthly squeeze, by the way, if you don't know what a monthly squeeze, this is about to squeeze on a monthly. I've been waiting for this thing for so long. You guys have no idea. What some of you do. Some of you do. Actually. But yeah, this I mean, we can see, but this, this is broadening. This is American Eagle. Will Sydney Sweeney provide another? I mean, yes. I don't even think it's Sydney Sweeney, but this is, look, retail's hot. Mall trade is on. It's hot. But does it last? That's the question. So the mall trade is on. Does it last? That is the question. We're probably in the 3rd inning, or like in the 6th inning, the third so far of this little push. Then we can expect some back and fill. What's the yearly say on these? On ANF? Oh, dude, you are going to be shocked. 12-month candle. That's what he wants to know. Failed. It's going to look real good next year. That's a 12-month candle. Here's a monthly candle. It's going to look real good real soon if it does look pretty good. But yeah, that's like 50% just to get back to where they were. But you got to have long-term view on that kind of stuff. Sorry. Let me stop tinkering around. So we've got a lot of stuff. Mall trade is on. We got one more to go. We got some Deckers. We got some nice call outs. VF Corp. We got a handful of we got a handful of trades that are still going, but underneath the surface there are cracks. So I think that the moral of this story is follow the money. Some things look good, some things not so good. Do I need to press everywhere all at once? No. right? And do I want to, and I want to be really cautious of overstaying my welcome in certain areas. And this is where we are. So because, it's really hard to know everything all at once. We have to really rely on some other forces. So because of that, we usually call in our friend, and we usually have to call in other experts, and the other T in TA is tarot. So without further ado, let's go ahead and check in with our buddy Miss Cleo and see what she has to say. All right, boys and girls, it's here. Hit the like. This is the T in TA, which stands for tarot. If you didn't know, actually it doesn't, but this is how it works. Comedic relief, not comedic relief. Sometimes she's hot, sometimes she's not. But the first time I'm really looking at these cards, and it's a hard view here. So I got a magician. Magician is usually okay. I'm trying this annotation tool, and I don't really remember what keys. No, no, no. Square. All right. So that is the magician. This is the theme card for the week. And then for every day of the week, we get a card for the day. The only one that's standing out for me right now is this guy, which, yeah, I don't know about that. That looks like we're standing out in the cold. I don't know. This is a one though. So usually it means we're starting something new, and he's magic. So maybe it's like whoosh, 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 whoosh. Um, and we end on a chariot. So who knows? I have no idea. I just know that this one doesn't look fun. That's Wednesday. I have no idea what happens on Wednesday. And then Queen Chariot. But theme is the magician. This one, I mean, this guy looks like, what has he got? Bandage on his head. Looks like he looks beat up. So maybe we got beat up today. The pentacles. Yeah. I don't know. Um, no, it's not death to ETH. ETH, she does a whole nother reading for crypto. But anyways, let's see what these say, because I'm done speculating here. Actually, that's right. This week she gave me like a recap. So last week the S&P 500 and Nasdaq delivered a decisive Thanksgiving week rebound. This sets the stage perfectly for this week's cards, especially given the presence of the magician. Okay, who often amplifies and extends sudden shifts in sentiment. Oh, that's sudden shifts in sentiment are lame. There's also a clean 945 series, 945, suggesting Nine of Wands defense, Four of Pentacles stagnation, Five of Pentacles, oh, oh, breakdown or flush. Huh. Well, okay. So I'll put this in the lockbox if that's a series. I didn't know that was a series. Um, is a clean deceleration, compression, shakeout sequence typically sets up a strong late week movement. Classic magician. So right now I'm just reading this as Miss Cleo saying down, but let's see. That's sometimes she's wrong on this stuff. So I'll just read the cards. The magician brings controlled volatility, not chaos, but movement that looks obvious only after the fact. I can deal with that. The theme tends to reinforce continuation, turn small shifts into meaningful swings, creates a trap at the open, follow through in the afternoon. So that is probably notable. Trap at the open. Trap at the open, follow through in the afternoon. Make make the second half of the week more important than the first? I mean, I think that's what the setup looks like to me. We'd expect strong amplifying energy for the daily cards. Let's get to those now. Okay. I'm all like seriously trying to understand what you're saying. God. Classic magician. Yeah. The nine of wands represents a defensive stance. Yeah, all right. After last week's strong rally, this card often marks hesitation and reluctance to extend gains. Price movement usually remains limited after last week's rally. This card suggests taking, reluctance to extend gains for fear of chasing bias. I mean, if you think about it, like that is what I would expect anyways. Just like, I mean, classic tarot, I suppose. But for anybody that was really concerned about, just a couple weeks ago at the lows, like here we are back at the highs. Why wouldn't you take measures, right? Um, expect a controlled low trend day as the market digests its gains. All right, that's today. Tuesday, Four of Pentacles. This card signals stubbornness and compression. Range is narrow, volatility contracts, and price tends to stay near the open. The market commonly pauses here as traders wait for a clearer signal. This is a consolidation day, not a trend day. So is it a turnaround Tuesday or not? It's not a turnaround Tuesday. It's a consolidation day. Wednesday, Five of Pentacles. This should complete 945, which looks very similar to crypto series. The Five of Pentacles often brings a weak open, a liquidity flush, emotional selling, and a recovery into or after midday. It's like one little, what is that? Boosh, boosh. I don't know if, or if it's like that. Which one of these is it? We don't know. This can be midweek shakeout before the real trend begins, especially under the magician. Thursday, Queen of Wands. This should open up now as the Queen ushers in a new day of impulsive, high energy, and trendy price action. All right, we got trend. When she follows a flush, especially a pentacle flush, she produces, oh, oh, bull days. Best bull days of the month. Best bull day. Okay. So interesting logic here. Best bull days of the month. This is CRM day. I think this is CRM day. We'll see. This is CRM going to save the whole market? This means we have a strong, it's possible actually. CRM is a massive component of the Dow. This means we have a strong chance of chasing a momentum day and a day trader's paradise at worst. What? You lost me. This means we have a strong chance of chasing a momentum day. Oh, a day trader's paradise at worst means that nothing holds. Got it. The Chariot, Friday. Interesting to see this in both spreads this week, as with crypto. It signals acceleration and rapid movement. The last time the Chariot followed the Queen of Wands, we saw the following pattern. Thursday ignites, Friday extends, volatility starts to creep, but the trend structure holds. This completes the post flush rally setup. Post flush rally setup. Oh, the bounce completes the bounce and aligns perfectly with last week's macro shift back towards risk on behavior. All right. So a little dipski that gets bought. But she says straight up, shift back towards risk on behavior. So dip buys is what I mean, if I read the words on the screen, she says dip buys. This follows a two-phase structure. where we may see an early decay and flush, followed by big rebound that extends for 2 days to close the week. Either Miss Cleo has gotten really good at learning my system, or she's watching. I don't know. But if you're watching out there, Miss Cleo, shout out to you, because let me show you guys what this looks like. Because man, oh man. So you guys know, or you might not know. For me, we've had this red box here, and I can try to make this a little bit cleaner. It's not going to be that clean, but here's the lows right here. So right now we're talking, peak exuberance over here, gut wrenching despair, and then whipsaw all the way back. Right here, honestly, she's like spot on in terms of we're not able to actually extend. These lines on my chart are important. So the red box here, this represents a single day's price action. That single day is non-farm payroll day. That's one big day. That was a downside day. And usually when this happens, we'll lock the low or the high for the month in that single day. Not like 9 out of 10 times. And it was very possible, and I already posted that we'd locked. It was equally possible that we locked the low as much as we locked the high, but based on where we were, look, I'm pretty sure that was the low. And I actually would still be on that same train of thought. Now, where we are right now, can we get a retest of that same level? So that level is 675.56, and you should be able to see it pretty good on my screen. Yeah, I think you can. Let me make this a little bit bigger. So 675.56. There's another, what you don't have. When we didn't have NFP, the market has been operating on ADP, and ADP is up here, and it works the exact same way. Right now, we have this trigger. So if we get from one level to the next, so the range was small, we're here. If we can't get a close over 681 and change, well, then we don't continue higher. And really 685, which is nearly the gap, the session gap of today, very nearly 683.45, which happens to be a very similar gap over here that's holding true. 684. Now we're having this gap here. This whole area, this is actually pretty heavy resistance, just so you know. This is a lot of sellers liquidity up in here. So why 685 is important. It's that if that happens, there's zero question in my mind that we are definitively going to 700, and that's going to look like a breach over 685.88. No question, full stop, all-time highs in short order. Just end of story. Are we there yet? No, we are not. I heard a little blip. Hang on. Let me check.
Yo. What is
There he
up?
is. What's up,
Sorry,
man?
what did Miss Cleo say? Did I miss it?
She's a little sketchy, dude. She's thinking dip for the week that gets bought up is what I read. And yeah, we can go with that. We can roll with that. It's not bad. I'm gonna turn your volume up a little bit. It's a little low on my end. But just kind of checking out the charts at the moment. Running into this 685-ish overhead resistance. So I think that we bang our heads on that a handful of times, and I think that's to be expected. But this bottom box right here, I'm going to take this red box off, actually. So we don't really need it. If we lose 681, which I think is totally possible and super realistic, we can come in and hold around 672. Anything in this area, I would actually call general support right in here. And definitively, this 670 right here. So if we can pull back and hold the support and start to chop like this, chop and get up and out, I actually like really like that kind of a setup. And that would actually set us up quite a bit. If that doesn't happen, and let's say, I don't know, Bank of Japan, whatever, yen ends up being a big issue, then we could be looking at revisiting these lows. But I don't think that there's a situation here. Well, that will happen if we hit our heads on 675. So if we hit 675.85 and reject here, that is also a foregone conclusion. So two foregone conclusions here. One, if we get over 685 and hold, we're going to all-time highs. But right in here where we are, it's a bit of a chop zone and actually pretty trendless. These are the two trades that I have kind of teed up from a swing trading perspective. One is here. That would be there. Two would be fully over. Then we're definitively going to all-time highs. And then inside of this box, if you will, I can kind of just look for either dip buys that get bought. I think a dip buy could get bought over here also, by the way. But I would be very cautious of this happening right in this area. But generally speaking, this right here around 670s is going to be your support. And when I turn on my volume profile on the right, you'll see like this peak right there. That's your mountain range. So one major confluence area right over here around that same 672 zone, that's going to be your major support for the week. In the meantime, what we're doing is we're kind of hitting our head right over here, which is that upper end of resistance. So I don't want to go long into resistance, which is why this is more on the realm of wait for a better entry till it can clear this, and then we can say, hey, yeah, we're going all the way through and we're exiting that resistance area, but not really before then. Before then, we kind of want to be on our toes a bit. And even this, if this happens, that's a much bigger buy for me. And I would actually like that quite a bit. So, so all that said, I'm kind of in a wait mode. So just like kind of wait right here. Still a little hedged near term. Some things look very good. Some things not so good. We went over the mall trade. The retail renaissance is on. It's hot and heavy. My VF Corp is looking amazing right now, 18 and a quarter. I can't believe this thing is happening, but it's happening. ANF is still going. We got American Eagle tonight, or like in the next couple days. The crew called out Deckers. I don't know. They think you're buying some more Uggs this year. It's possible. That looks very bottom E. I agree. Very bottom E. Bottom E. Potentially. Bottom-esque. And they want Victoria's Secret. But this thing has been on a ripper. But anyways, those are the charts for now. Some things good, some things not so good, some things a little just wait. And I think overall, there's some cracks that are forming in terms of like global things that are happening. China bonds, the yen carry unwind 2.0 still on watch for December 19th rate decision for the Bank of Japan. And at the index level, a little stretched, right? But underneath, widening, broadening for sure. Gold looks great. Dollar coming down, not breaching that 100 level, pulling back a little bit, breaking this uptrend. That's good. I'd like to see this pull back a little bit more. But the yen unwind, hitting crypto quite a bit. But since they asked for it, literally right here, right now, this is the spot. So 2750 is the spot. Actually, shoot, right here, right now. So I like this. I wasn't expecting it to be here right now. I did not realize how big of a haircut ETH got. This is like a medium risk entry on crypto. Medium risk as in you have a hard stop. $26.25. I mean, and it's obvious, right? So if we needed to get over 3150, by the way, 3170 for this chart to be up and to the right, that had to happen. And honestly, it needed to happen by today's open, Monday morning open, because if we were to have opened at 3170 or trend over 3170 on Ethereum this week, then all of those crypto bears would have been completely offsides and they would have basically just had to cover near instantly. But that didn't happen. Crypto kind of showed its true colors over Thanksgiving, like it always does. Did not see a pump, and I think that was the moral of the story. We didn't see a lot of buying coming in. So I think it's okay, but my caution here is that if anybody, the issue here is that if anybody that bought on that 2600 dip, 2625, whatever it was right here, what are they going to do? When you think about the story of what this price action is going to tell you right now, what it's going to tell you right now is that there's a lot of stop losses right here. Quite literally, they had an entry, it was good, they got a bounce, and what do is they turn their entry price into a stop loss, meaning, oh, I bought there, I don't want to sell, I don't want to let my green trade go red. This is classic traders in the crypto space. They don't want to let their green trade go red. And so this in fact sets up for a liquidity grab lower. And that liquidity grab lower was 26. Did you see my Evan? Did you see my turkeys that the wifey made?
No, but I really do like that actually.
Dude, is that not sick? I've never
really
seen,
cool.
that is awesome. And they were very good, by the way. These are little pretzels, and she did like their little marshmallows. little marshmallows on the top of a pretzel stick. I don't know what
I
this
thought it was
was.
just white chocolate.
These are white chocolate on the, and then grandma, the boy, sorry for the tangent, but the boy wanted them. And the funniest thing, grandma breaks off a leg and she's like, here you go, did you want a thigh? And I'm like, what the hell? But anyways, did you want a thigh? Yeah, hilarious. So where are we? I'm trying to find my posts. And I think net is going to be very day to day dependent. And I posted where we're going on ETH now. If this doesn't happen, if I can find it, it's 21s. 2159. So bounce probably going to be the bottom for now, if not very close to it, right? I'd like lower, but the reason, and then you can follow this thread. What's funny is that going long in this 3057 also basically where we stopped. If I drop this to a smaller time frame, 3100, We got 3,100. And then Monday, boom. Cool Whip says, kind of glad I didn't. Rather wash out the longs before this clearing the shorts. So it's an okay spot, but I honestly think that this is going to set up for another flash crash, especially with what's going on in Japan's market and the yen carry unwind 2.0. So I'm not huge into this right now. I think it was a great spot, a tradable bounce, a low risk bounce, if you will. This is the other area. I mean, that would be wild to see it at 18s. I'm just going to call this. It's not a session gap. It's a fair value gap. 1850, couple spots to get through. This is a high traffic zone, right? This is a low traffic zone. So I think that we're going to get stopped right in here, right? And if this isn't it, it's very close to it. Again, which I don't know, if it gets stopped out, first of all, I think this is fine in here. If we lose 25s, yeah, okay. Well, then we get this, and then you're up and out. But and it's around the 18s, but I like 21s. And you really, I don't know that we get there. You're really going to start to look at this lower liquidity zone. And I'm going to call out this one specifically, but I'm not going to use a normal tool. I'm going to use a different tool. We're going to go straight across 2113. See if I can lock it right in there. So two things. One here, two here, three here, four there. So a lot of little touches of liquidity. You can see it again here. And it's pretty obvious here. So this is a really important spot. And I'm just pulling out to zoom out on a daily, which when I pull this area back, it's like this.
By the way, paper, can I give you a little headline you might like?
Yes.
Robinhood said on Bloomberg today that they had 3 billion prediction contracts traded in November. That is up from 2.5 billion in October.
What is going on with your audio?
Sorry, Dad. I'm sorry.
I think you have connection issues. So this doesn't change this. Because we don't know that this is going to breach yet. We're like right in here. But net, that's where we are. He's back.
All right, I'll have a lot more background noise here, but I should sound a little
Oh, it's
better.
way better.
Robinhood said they had 3 billion prediction contracts traded in November, up from 2.5 in October.
Where did they post that?
Bloomberg is where he said it there. But dude, stock market news stamp of approval, source is 100%. I would say I trust the source.
Source is 100% actually. Where'd you post it?
It's on my X. They also have Robinhood's down. But no, okay, wait, never mind. I should update my chart.
Yeah.
It is crypto. Robinhood also has an event that they've been talking about, the AI events.
Oh, yeah.
Yes, no, 16th.
December 16th. Yes, no. This is prediction market. December 16th. Did you know that Robinhood is Robinhood officially the best performing S&P 500 stock in the market this year?
No, I think there was one or two in front of it. Let me tell you the exact answer.
Lies.
Year to date.
You love this picture.
It is good.
This is your favorite picture.
Number one is SanDisk now, once it's added.
Oh, I thought it was Western Digital.
Number two is Western Digital. Before SanDisk was added, and then Robinhood.
Now it's Robinhood, and then Robinhood. Yeah, SanDisk and Western Dig. Those are up like 500%. But
Can I see the chart in Robinhood?
Dude, the Muffin Man again. I don't know what's going on.
The Muffin Man?
The Muffin Man. No, I'm sharing. Now I'm on your screen. That's what you sound like inside the can. Sound like a muffled muffin. So here's Robinhood. 3 billion prediction contracts traded on the platform. In November. That's a big beat. And then December 16th. New events.
Prediction markets and AI.
Our latest AI innovations and prediction markets. Robinhood. Yes, no. Yes. The answer is yes. But Robinhood gets tied up with the cryptoverse quite a bit. So if we cannot hold over 750, which right now it does not look like we can, we're going to see that 2650 again. Real short order. Which is 26s on bmnr and the like, without even looking at the chart. If this doesn't hold, this is sub 20 on bmnr, and I think that we're already at like, okay, trim and potentially exit stage left and look for another re-entry, but a solid bounce nonetheless. But crypto and the yen carry unwind 2.0, I think are very closely related. At least that's what I see. I don't know when that comes unwound. Legitimately, it'll probably be like the end. But this is tactical, technical, bear flag break, and inside of each one of these are another bear flag. But I still think very close to the lows. Is it another dip buy? Possibly. We don't know until we get there. And we're not going to know until we're below 25. So for now, I think, just know, hey, at 26 and change, whatever we were coming into Thanksgiving, a lot of people are going to have some stop orders there. If we breach that, it's probably going to create from that last entry. It's probably going to create some liquidity grabs. Honestly, I'm not so sure. Actually, now that I think about it, it's pretty obvious that this is coming in. So I don't know that they would be waiting already for their stop. They might have already stopped out. So maybe that is happening, or that's what we're seeing right now. And it gets bought up there again. That's why I'm saying unless we're below this whole thing, I can't say that this is happening yet. Just the same. I don't see that it's happening. We should hit some traffic in this general area, 25s, but this general area is a good dip buy. But I'm not going to step in again. This would have been trim, and then potentially look for a better entry as close to 2K as you can. to round it off. Do you know he sounded like a Muffin Man, right? It reminded me of the Muffin Man.
The Muffin Man?
Yeah. If we pull, so KVG is asking a question. It depends on your exposure. That's very personal question, and that depends on your exposure. If you're talking about hedging, and then if you're talking about directional trading, depends on your timing. So it's complex, a bit of a complex question, I suppose. Typically, though, if you're going long, you can buy more time. If you're going short, though, the good old saying, stairs up, elevator down. You don't need to buy a lot of time when you're going short because elevator down. And buying a lot of time when you're going short, it's not usually, it's usually like a waste of money, honestly, because it works out pretty quick when it works out. That's just my 2 cents. And if it doesn't, it doesn't. But VIX coming down 16, it's just the crypto market that's getting hit. And I think that has a lot to do with the global situation. But if crypto leads, it's something to be cautious of. Cautious. Global cracks today is what I got. Global cracks. I like Celsius. KVG, you're gonna have to save these kind of questions for the server, for when we do our private training. Don't take over the stream. All right, and we got AWS keynotes, economic stuff. Went through earnings, went through Evan's amazing stuff. I think we're good. So I'm gonna scroll up. So we got our boy asking about Celsius, and I did buy some Celsius. I didn't actually buy the drink. I bought the stock though. That didn't happen. And I was looking. So we got this balance that's over with. Then we got a bit of a breakdown. Why are my settings keep changing? Trying to change the settings so you guys can see 28. It looks okay. Ew. Okay, blue is a 50-day simple, red is a 200-day simple, white is a 20-day simple, and purple is actually a 200-week SMA. And I'll take a lot of these things off. But Celsius coming up here, I think this was one of these two. I don't know if it was, yeah, so from like inception lows to inception highs, like ultimate swing low, swing high, you're in that kind of golden pocket. Also, from here to here, right? You'd hit that upside target. And then when we're coming over here from this swing high, this swing low, right here, this pullback happens to be, so 2 points of confluence. One, inception low, two, inception high. I mean, like from beginnings. It's all pointing me right here, one more time, around the 38s. So I like this. We should be able to bounce to 43. If we can hold over 43, then we should be able to make this trek back over to 50. And that from 38 to 50, by the way, is actually a really good, like that's a really good trade. Just saying. But I got to get over this 43.82. And if that happens, That's the first level. Nothing's going to happen right now. This trade is only up to 43.82. This is my statistical edge. I have a very high probability to get to about 43.82 to go from here to here and travel within this low volume pocket. That's a very low risk, high probability area to trade. So, but that said, is it high probability to continue higher? It's not. That does not become high probability until I'm out of that kind of congestion area, which is over significantly higher, right? So we got to get through this next. But for right now, if this best case scenario that this gets stuck in here, and eventually I see something like that. But we're going to 44s, give or take, and then expect some serious chop. And if that chop can produce something like that, that would be ideal. That this is going to be the 200-day simple. The 20-day simple is like a straight vertical line down right now. That's this white line. As price moves higher, what's going to happen is that I'll zoom in. This 20-day is actually going to level out, and price is going to eventually cross it. It'll hit its head, and it might take a big shellacking somewhere right in that 45 area. So be very cautious right around this area, because while this is a low risk, high probability trade, it's very much like Ethereum. 2600 first time you get there, extremely low risk, extremely high probability to get to near 3000, actually got slightly over. But from there to extend higher, that is not a high probability trade. So if trading is about probabilities and statistics, this is what that looks like. And then we just kind of pick the easiest, trajectories, which are these little spots. So it's going to get much harder for Celsius to continue on. It's got to get through 45 and it's got to hold it. But around 45, I absolutely expect it to get smacked to the downside. And what does that look like? I think probably if it can hold around 40s, that would be cool. But and that would be about a 50% pullback of this rally from the lows. So we'll have to see how that plays out. But that's where this is going. Can it get through? Sure, it can. But remember, these SMAs, the 200-day and the 20-day, are like magnets. So even if it extends higher, that polarity of those magnets is going to pull it. And then if it does that, those magnets are going to push it away real fast. So low risk, high probability setup from here to there, not higher though. All right. These guys. Paul knows. Let me scroll to the top of this. And I know we had some early requests. We'll talk about bmnr just for a minute because we did look at ETH. So bmnr is sitting on the 200 SMA now. It's pulled back about half of what it's bounced, and very similar where it's hit the 20-day SMA simple moving average and just rejected. I actually closed my bmnr upside swings on Friday. So this big gap down below, not picking it up. I think we could chop, but if you lose that 28 or anything here, I think you're just at risk immediately. I think you'd stay, but be ready for, I'm just going to say it, be ready for a bigger pullback. And what that bigger pullback is potentially going to look like, it was 20. But now that I have a clean read here, so up here as a counter, if this ends up being a counter trend bounce, then a push down into the teens is here, and then 1350 would be a full extension. 1350 is a full extension of this counter trend bounce if this ends up being a counter trend bounce. So that is just taking this and doubling it to the downside. If that's a full breakdown, which if this loses this area, this 28, which honestly it's kind of done already. It's doing it as we speak. Not over till it's over. And I'm not trading for that right now. I just took my longs down on Friday. I'm not trading for this. It's gonna be a tough one. That's what this looks like. Does it happen all at once? Probably not. But that's where that could be. Just putting it out there. Ew. But if it's holding over 30, it's not happening. Also true. So as long as it's over 30, that is not a big deal. And that is not happening. And this 20-day SMA continues to be the magnet and gets sucked up into it. Very dependent on the sentiment around digital asset treasuries and the sentiment around crypto, and I think potentially the yen carry trade. Where do we go?
Yeah, bmnr has been a little tough for me. I heard bag holders are now community members. I think I'm a community mod.
Nice. I mean, it was good. It was a good pop. So I put a note here. Circle has the shareholder lockup releasing today. Oh my goodness. This actually hit the IPO price. Did you know that?
No, I have not looked at it much. I know people have been trading this thing like crazy. The volume.
OMG. Circle hit all the way back to IPO price. No, I don't want to short this, and I don't want to go long this, even with the insider lockup period ending today. I don't know that if you're an insider, you would sell this today, knowing that it was all the way up here. This is a funky little setup. It's an untradeable little setup. Well, it's not really untradeable. That is deep. If it's under 70, okay, we can go downside, but for how long, I don't know. And that downside is into the low 50s, which is like another 50%. But we're not there yet. I guess you can watch this. That's already pretty low. I mean, it hit the IPO low. It can go below it, and we're pretty far away from anything major or significant here on this chart. So something's not so good. Something's good. Look, this is it. Something's good.
Apple.
Something's not so good. Right? Clear head and shoulders. We should take this. Right? We'll take this. The thing is on this, I'm pretty sure that this pattern is also completed. Yeah. So that pattern is fully completed here. I mean, it could take you down to the 53. And a bounce could take you up to 88. So this is a wild bounce. I could see this happening just like this, and then showing up one more time with another head and shoulders here. Only way this gets saved is if this can actually traverse over 20-day SMA and hold over that 88. That's the only way that would actually look like that chart is on the mend, which is a long-winded way of saying I'm going to stay away from this bad boy because that's going to take some serious time to fix. Silver chart. Yo.
I'm going to have to drop off. I did want to make sure I said, if you guys haven't liked the stream and subscribed to Paper's channel, you're missing out. Fantastic guy. Cool stuff coming. Shout out to him. Appreciate you, Paper.
Very soon, cool stuff coming. So shout out to Peter for calling out the silver chart, which 2 days passed and I did not notice this massive all-time high break. I mean, who did? I don't know. This thing, OMG, has taken, I don't know how many years to do this, but it finally legitimately did it. Finally did it. Silver now looks like the biggest cup and handle, bigger than gold, like bigger than all of them. OMG. Good night. So, yep. There you have it. It's always a bull market somewhere. See, he's got good sayings. Held the 50, pull back. Extensions take me. Oh my God. High. Extensions take me to just under 55. And then a little chop. So it's nearly done. And then 50, just under 60. That's crazy. But this is new, 2 days old. I mean, and one trend that is intact is gold and silver rallying. Well, the dollar is pulling back right now. So we'll have to see that holds. Gold doing something very similar. Gold on the breakout move for its second extension. And if this goes, look at silver is going to lead this time. Shocking. That's new. If this goes, this gold move, which is going to go now that this is over this level, looking like it, 390, this gets you to 430s. Not too shabby. And that would look a little something like that. Not too shabby at all. So do you really need a hedge? This is a hedge in itself. And I think we're seeing some of that stuff. App 11. No. Not a big fan of this chart. So first bear zone hit, rejected. This is an extension completed. Did not quite get there. Only from here. First bear, I think this is a short. Yeah, now you're right into resistance. They don't like this. I don't like this at all. So this is into danger territory. The only, I guess tomorrow you'll have to see, because you have like pretty thin structure overhead, meaning this from here to here. That's like a 20-something dollar range. So if it can get over 17.617.72, it can make this trek one more time. But I don't know, it's been stopped a handful of times right here. It's a high risk, low reward setup. High risk, low reward for sure. Definitely. I would pass on this. You got a lot of traffic right here. And I don't have anything clean in the meantime. You might see it as a day trade, like maybe it goes, but high risk. Oh yeah, and then we have rotation on SPY. So the candidates would be SoFi. So S&P rebalance on Friday. It's Friday afternoon, I believe. SoFi holds 28 and a quarter. This one possibly gets back in. Oh my goodness, hold on. So if SoFi can hold over this level, that's going to be super bullish. This is a little bit different. There's some traffic in this 29, but there's at least a catalyst. So I don't know if there's a catalyst on App 11, a sentiment catalyst. Again, high risk, low reward setup here underneath that little high traffic area. So unless I'm watching this live as it's happening, if I see it happening and I'm reacting and not anticipating, big difference. If I'm reacting to a move that's in motion live as it's happening, all good. This is going. But to anticipate it here now, that's the highest risk area that you could do that, as opposed to down here. So late on the uptake if you're looking at this now, but this looks very constructive, knowing that SoFi is a potential candidate for an S&P inclusion on Friday, and just the anticipation of could be a sentiment catalyst, just a catalyst. Reddit, second one, would be on the list of potential S&P inclusion. People definitely getting a little love today. The squeeze is still on, up and over the 50. Also, though, no, so this is less risk. So this might be inactive. This is active. Shh. So right there. These guys are rough. Oh, it's a box. It's not as easy. Tough. I don't think you chase anything in this market, man. I don't hate it. It's a very squeezy spot. I'd like it better if it can get over that 230. Like if it can get over this little 230 blip on the radar, then okay. Then you have a similar. I think they're all kind of shaping up to show something equivalent, where like there's this low volume area that the charts can get sucked up into. And we've seen this before in the past where we see this, it ends up being consolidation as it hits its head. And then one day, whoosh, it finally hits. And maybe you see something like that on Reddit with or without S&P inclusion. All right. So This guy, Miss Cleo is Jason's sister. Too funny. She's not. Is that trade on Regenerant done? We can take a look. I think it's close. I mean, it's steamed out for sure. Momentum done. Now you need to see it come in. So you hit same thesis, same logic all the time. So you go from like one high traffic area to the next, right? And you make this trajectory in usually short order. There's a small one over here. But 750s, if this can pull back and hold that general area, then it's worth watching. But expect that kind of a pullback for sure, which is not that big on Regeneron. Why are all my negative candles white? Because why not? And red and green are like too biased. Like if you after you trade for a while, it does not matter like the color of your candles. Plus, it's a theme. It's my brand colors. They're not even regular green. It's like our specific HTML colors. So, honestly, I could make all of these white, and I would be able to read the same exact thing, and eventually, you guys would be able to. But colors on candles don't matter to me. I don't look at that. And eventually you won't either. We'll just do one last one, Palantir. Okay, so in the bear zone again, looking a bit rough. Is this messing with you guys? Possibly messing with you guys. Yeah, this needed to hold 173s. At 165, it's fine. You're in it. I would like to see this hang out in here, but just like everything else, from this area to here, I honestly think that that's the trajectory that we're going to make. And we're just kind of barely stuck in the middle. So I think that we are actually making this trek into the 180s, like 190s. So I like this high, like low 180s to get into here. I like it. And I like the way that this morning's dip got bought. This in the pre-market, and it held like this general area. I like that. So as long as it can hold that 165, 50% retracement area, and definitely this zone, I think we're fine. Plus, if I get another dip buy, I'll get another dip buy and I'll buy it again. But I think this trajectory is to that 180 area. And at the end of the day, it's just making the trek from this fair value to that these are called fair values. One area to the next. High volume node to high volume node. Peak to peak. Last one is, I don't know. Our boy doesn't do this one on Technical Tuesdays, but I know that you guys ask about this. He might ask me this time because maybe he cares, maybe he doesn't. I don't know. I think the sectors it's good. It's not a spicy sector. mean, some of the crew, I don't know what the market cap is on this. 9 billion. It's super small. Super small cap. You're over the bear zone. On both situations. Let me just pull like a quick fair value. 42s. About 40. You have a session gap here. So you're leaving this area to go. Oh, we just did this in our private group, but amkr has not hung out in this $40 range for very long. Most of the time, it sits in like this general 35-ish area. General area. I'd say, what is that? Oops. This general box. And now that it's leaving that box, it's going to make basically a little vacation detour to that $40 zone where it had a little blip in the radar. It's never spent a lot of time up here. So for right now, $40 is like a vacation stay for amkr. I don't think you can expect it to stay up here for very long because of that, unless it's legitimately being like re-rated. And at $10 billion, it's possible. To me, this trajectory does take you right into about 42s right there. So I think that would be kind of your target, but just right there. And at that point, then you legitimately should expect some kind of a pullback, and it could pull back into 37s, and that would actually be ideal if it did something like that and continue on. That would be great. But for right now, this is where you're heading for the vacation zone. Does it become like a new home at 40? Low 40s? TBD. Hasn't been there for very long in the past. Actually, the last time it hung out over there is 2024. So quite a while, quite a ways away. And no, I can't do this big thing, but since we're way too far to actually think about that right now. If it does, though, I'll just drop it here for you. 60s. If it actually does get re-rated. But you can't say that until it's trending over 40s. But I do think this one deserves a look-see, since nobody seems to take a look-see at it. But for the rest, I will take a look later on. NVIDIA, Tesla, I see that. I think today, today it's Monday. It's knee-jerk day. Not a lot of true stories happen on Mondays themselves. There's some really good stuff out there in the markets. I don't know what's going on with this mall trade, but these things are hot. Some of these things look real good. Some look good, some not so good. The high flyers, the mega cap growth, whatever, maybe not so good. Amazon, though, love it. Can it pull back? Absolutely. Do I want to be cautious of a lot of other stuff out there, specifically in semis and some definitive high flyers, including, by the way, my hoodie? Yes, I do. The last piece I will say is that I posted something last week about Amazon and Google, and it'll all be, I think I said something to the effect of, it'll all be over when the last generals fall. What I mean by that is that usually it's Amazon or Apple, sorry, that is completely disconnected from the broader market around this time. And what happens is that you're like, oh, all the talking heads on CNBC over here, they're like, oh, Amazon or sorry, Apple, relative strength, relative strength. It looks really good. It's a good place to hide out, is what they say. Hide out, hide out. But eventually, they pay the piper. Eventually, and all it is that it's the last general to fall. But that moment in time when it does finally pull back a little bit. First of all, it's a buyable dip. Second of all, that last blip on the radar, because there's such large mega cap companies, it's usually the last piece of the puzzle that needed to be fit together so that the rest of the market could actually go. And until then, I think that's kind of what I'm looking for, maybe waiting for. So Apple, Google, I think maybe a little bit more defensive also, even though they're great companies. Look, Apple 180 is doing the thing right now. It is completely disconnected from the market in its entirety, like completely disconnected. So we're not quite there yet. Google's showing a little relative weakness of the last few days, but it's still really strong. All I'm talking about is like, I don't know, pullbacks to 300 on Google. I'm not talking about full-blown breakdowns of any magnitude, but I think that when those kind of things happen, maybe 250s on Apple, if those things happen, these are swag numbers, then that's going to be like the market having used these relative strength names as kind of like their ATM machines to go shopping. Again, no pun intended, in the mall resurgence, but potentially when they do finally pull back enough, those become attractive again. Nvidia will probably turn around, and we're back to the upskis. And while that process kind of plays out underneath, it's just that broadening. So generally speaking, still looking at overall breadth widening, which is healthy. None of this stuff happens in a bear market. You don't see that. Today, I'm looking at a lot of volume coming out of the market from a live internals perspective, by the way. And a little bit hot overall. So I think we can pull back. And then I think those dips eventually get bought up, and hopefully that sets us up for a better opportunity later on. Yeah, and I think a lot of this stuff is going to be right there, right back to where we came. I think that the stuff that we've had is kind of band-aid and not really a major fix. December 18th, 19th, boom, right? That could be that was literally on my number one thing today, right? I think December, I think it's 19th, which might be a foregone conclusion, but that could be the thing. That's why I'm like hopefully it's mid-December, because if it's already priced in, remember, it's just like us. If it's already priced in before it actually happens, by the time it actually happens, it might be a positive thing if all the damage had been done ahead of time. So just pay attention to the rhetoric around this. Today, it's not a big deal. Today, the market's not even whispering about it. I'm telling you guys about that, but not many people are. So by the time it actually happens, we're going to be what? We're going to be peak fear again. The market climbs what's called the wall of worry. And you usually want to buy that peak fear. VIX over 25, VIX at 30, usually a good time to buy. VIX sub 15, VIX 12, we can ride a trend. But when we don't have a trend, which is right now, we don't have a trend, it's a little complacent. So a little cautiously optimistic. That said, I'm gonna stay hedged, but some things good, some things not so good. Overall, not to worry though. I think it'll all work itself out at the end of the day. And there's probably some more Black Friday deals to come. Maybe even end of year specials. Who knows? But until then, I will see you guys on the next one. I appreciate all your support. Make sure you subscribe to the channel, like the video, and I will see you guys on the next one. Adios.